I can't tell you how many times over my career someone has had a preconceived notion that isn't correct, and they're so worried about it that it's eating them up inside. People who are outside of this business really can underestimate the level of emotion that can happen during a transaction for people in the middle of it.
Hi, I'm Francisca Alonso, the CEO with AV Architects and Builders. And today I'm here with Josh Burruss, the Executive Vice President of Intercoastal Mortgage.
Thank you for having me.
Oh, we're so happy you're here. We're not lenders, we're architects and builders, but we get asked the question all the time. Can you tell us a little bit about how that process works?
Cover the mortgage process from front to back on a construction project. We start out by getting an initial application, going through all the client's financial information to determine an overall budget. The way we do that is we will do a soft credit pull, and then what we'll say is, how much cash do you want to put into this transaction? Do you own a home? How can we help leverage that home to give you this cash that's needed? And then we'll contact you and we'll say, listen, this is kind of the budget we're looking at. You put together plans and specifications. We get an appraisal done. That appraisal comes back in. We say, listen, we're good to go. We close many times the purchase of the lot and the construction loan at one time. We fund the loan based on interest-only payments. And that's like a line of credit. And that line of credit gets pulled upon as you complete the project. Once we're within about 30 to 45 days of it being completed and we get a certificate of occupancy, that's when we're going to look to lock down the permanent loan terms. We're going to determine the perfect financing solution for them at the end. And then we'll go to that permanent financing after updating some documents, and they'll be in their home.
One of the things that I get asked too is, how much money do I need up front?
Sure. Well, that question can vary a lot, right? The way for people to think about it is this: the higher you go in budget, typically the higher amount of money that you need when you go to purchase the lot and close on the construction loan. They're all determined based on what are called loan to value requirements, the amount of loan divided into the value of the home. So the higher you get on that scale, the more down payment you need, because it represents a higher amount of risk to a lending institution. We communicate with our clients as they look at project size. But quite oftentimes on something like a $3 million property, you're looking at a sizable down payment of 30 to 40% in some cases. But the way that this thing works is, quite oftentimes there's so much equity that it happens when they find a great piece of land and a builder puts a great house on the property, that they can garner equity almost right away. You can tap into that, which is a huge benefit for clients. So every single solution is different and customized, but just for clients in general to know, the higher they go in their budget and overall cost, the higher their down payment's going to be, which makes sense.
Of course, of course. It's a huge privilege to own a home.
I 100% agree with that.
And it is the American dream, for sure. And even a bigger privilege to be able to build one.
And what's interesting is when you look at construction or construction lending like it's this huge, overwhelming thing.
Right.
When you work with people who only do this, it's not.
Exactly.
And it can be a joyful experience with the right people. The best way to reach me is my cell phone, 703-727-4239. Again, that's 703-727-4239. Or via our website at www.burrussteam.com. That's BURRUSSTEAM.com. Thanks so much.